Welcome back to another episode of my trading vlog, and by request, this video is just going to be about AMC. So if that's what you're into, kick back, relax. I'm going to guide you through this chart. Yes, it's complicated, and I'm just going to take it step by step. There's a lot of things here that might be kind of confusing because it's Elliott wave analysis. Basically what we're doing is we're using logic to say, hey, if there is going to be the presence of a trend, then some rules are going to apply. And that includes some basic addition. If you're going to be in an uptrend, all the sum of the up waves are going to be greater than the sum of the down waves. It's simple stuff like that. That gives you the first and second rules. The first rule is that you have to have less action retraced than the initial move, right? Impulse or actionary trends are not completely wiped out in a motive wave. And so if that does occur, you do have a new low set, then we have to label it as a corrective wave. And that's just the first rule. And it's based off that little bit of logic. So if you can follow me that far, you can start to do the analysis and just start to identify when you're in a motive wave and when you're going to be corrective wave. So let's talk about that a little bit. So let's start with this low back here, January 9th, the first week maybe of January of 2023. Price was sitting at around 388. And at that time, I was following this descending triangle through here, and I said, you know what, this looks like it could be a good bear flag, but honestly, I don't know until we get a breakout. The breakout occurred, and we had this huge push. It was a surge higher, and now we're going to skip way ahead. When the price finally did start to retrace towards $4, this low back here becomes very, very important, because remember the first rule. This first actionary wave cannot be completely retraced if we're going to set an uptrend. Well, sure enough, back in, well, the first week of this month, April 4th, it looks like, we had the low come in below the low of that prior downtrend. And so this uptrend through here, guess what? It becomes corrective. And this is probably A, this is probably a B wave, and now we're probably in a C wave heading higher. A, B, and C mark corrective waves, and numbers 1 through 5 mark motive waves. And don't get confused, because there's a fractaling principle through here too in Elliott wave analysis, where waves A and C have motive waves in them. And actually so does the B wave. They all have motive and corrective waves built into them. It's just about how they sequence. So let's just go back. We'll start in early January here. Here we go. Descending triangle breakout. Big push upwards, and then we had what's called a flag, like a half staff formation. I know, it's everyone's favorite pattern, right? Basically what a flag describes is an impulse or an actionary wave for the flagpole, and then that correction is the corrective wave. And if you know Bulkowski's trend analysis rules, you don't really set that uptrend until you get a new high, which occurred January 17th, which priced way up towards $6. And that's when we put down this green trend line here. So we had a push up for A. It's labeled B, which is dumb. There we go. Fix that. A, B, and C. Now, why didn't I make this into a 5-wave form? This stayed A, B, and C because we didn't get a 5th wave pushing higher. If this were to be a motive wave, what would have happened is we would have had this downtrend through here, and then the price would have continued to follow this uptrend higher, setting a new high. And there are some rules through here and some tendencies, and that would all be evident. But we don't have that. Instead, what we have is this really long sideways grind. There's something about proportionality that just cannot be missed. We don't want to call this 1, 2, 3 huge 4-wave, 5. That might be tempting, but it doesn't make any sense in the Elliott wave analysis form. So what we do is we call this A, B, and C, and then we start going through a wedge, and that's shown in blue through here. If you can follow that, I know my charts they're cluttered. There's a lot in here, so we're just gonna clean this up a little bit. We're gonna get rid of that downtrend. I like this pattern shown in white. That's the reverse triangle that we're currently in, or we were currently in at this point in time. Maybe I get rid of this uptrend. That can help clean it up too. Half of charting is presenting the data, and I think that's something that a lot of people miss. If it's not like comprehensible, then is it even worth anything? Okay, so let's talk about triangles. This one I have labeled with numbers. Typically, you're going to see me label my triangles with letters like A, B, C, D, and E. But here I have them labeled in numbers. And why is that? That's because there are a couple different types of triangles or wedges in Elliott form analysis. If you do chart pattern analysis, everyone's familiar with the quote bullish falling wedge and the quote bearish rising wedge. But Elliott wave analysis provides us with some logic that says, hey, if you have some overlap between the first and the fourth wave of those triangles and the mode of each wave and price between trend lines follows a certain criteria, then we can just make some certain assumptions. And so this is a falling wedge. So the price is in a downtrend at this time, and that downtrend is forms that upper trend line. The lower trend line is kind of like, it's not really a level of support, but what it does express is that there is support, but it is falling, okay? So here we go. What happens here is the price moves from the top of that downtrend from 623 and forms in a clean ABC move down. And it's like, why is this an ABC move? Because it's definitely not motive. In fact, I'm going to go into 15-minute time frame here. Can I go that far back? I can. It'll be a little cleaner through here. So let me just like highlight what the zigzag looks like. That's A. And if you look, A has 5 waves in it, which is a motive wave, right? 1, 2, dumping for 3. You're going to see how much stronger, how much larger wave 3 is than wave 1. 4 bounces and 5 comes down. And there is a principle of alternation in Elliott waveform analysis where wave 1, if not extended, will probably lead to an extended third wave, and then we alternate back to a non-extended wave for 5. We get A, B, and C. For wave B, you can see A, B, and C. And if you're really observant, you're going to catch that in here, that's very small ABC, that there's even another little triangle through here. Check that out. Yeah, it's right there. It's very small, and I'm sure on a smaller time frame I could probably show that. Price breaks out of that corrective uptrend and begins to push lower in another like zigzag. This isn't really motive. See how flat the price is? When the price is overlapping, when it's passing through the same price levels very often, you can bet that you're in some sort of sideways grind. That's a corrective extension. Sideways, it's not motive. The whole principle of actionary, impulse, motive mode, the whole thing is about making progress. So if you're not making any progress, you're just going to be in corrective mode. And that's what we see coming all the way down until we hit what I have labeled as 0.1. Zooming back out here so we can get a better overall trend. And I'm going to go back to the hourly time frame because it's just easier to see the converging trend lines with a little less movement in the charts. There we go. Price heads higher up to 2. And you can see that we have a double top through here and that there's a lot of overlap in the price around that 550 area. So again, we're moving in a corrective mode here, probably for A, B, and then C has 3 waves in it, which is fine. It just means that it's complex. It's very confusing. Waves A and C are supposed to be motive waves, but they can actually be comprised of double zigzags. I know, it's like, it's all complicated, but you can just break it down and say, hey, it's not motive. We can call it corrective, and we can leave it at that. We can simplify it as much as we want because it's about the fractaling. So A, B, and C gives us 0.2. And then again, we see the price move in another 3-wave form, right? Another A, B, C down to 0.3, and then straight up to 4. It's possible that there's like a small 3-wave move through here from 3 to 4. That's okay. And again, this is a matter of practicality. So I don't feel the need to always break it down and zoom in on the 15-minute and be like, hey, let's find that 3-wave form. Again, you can see that there's even like another one of these little triangles through here too, huh? You see that? Yeah, so there's your A, B, and your C forming that triangle. That thing is brutal. It looks like it's very tempting to think that's going to be bullish, and then it never is. I mean, it could obviously be whatever it wants to be, but I have yet to see that particular pattern be bullish if it's pointing that direction. At any rate, price then moves down, and you can see another clean 3-wave pushing down, right? Initial push, small half-staff formation through here, little knot, and then boom, price pushes down below that third touch point of that lower trend line. This is very common in Elliott form analysis. Wave 5 or E in a triangle, oftentimes overthrown, underthrow, whatever. Price goes beyond that trend line. And then if you find yourself in a reversal, get ready. Because if waves 1 and 4 overlap and you have sets of 3 through here, what the price is signaling is that the downtrend is corrective in nature. And that's epitomized by those ABC moves between each trend point touch of the pattern. And when you have that 1 and 4 overlap, this is, for whatever reason, the giveaway. And one of the criteria for ending and leading diagonal triangles. Now, the wave position of an ending and a leading down triangle are very important. In this particular instance, it's kind of tricky because this almost looks like it's in the middle of a larger trend, in which case this would need to be a horizontal triangle. So again, this is complicated stuff. AMC moves in really weird ways. It just does. It finds a way to get around, but it just does it in the worst way possible. And I think that's because of its relationship with Ape. Yeah, when Ape came into the picture, oh, it got weird. It got really weird. But that's okay. We'll return to this chart pattern analysis. So we had this downward breakout, this underthrow, this price action beyond the trend line there, and the reversal, and it was a dramatic rise. So these kinds of triangles where you have waves 1 and 4 overlapping can be very powerful. And if it's in a downtrend, then yeah, expect a big push higher. Now, there's a couple of things about these triangles that I won't go into right now, but it's basically what I want to say is, hey, you found a wedge, great, but is it actually bullish? And that's just relative to the direction it's pointing and the kinds of waves that compose it. So anyway, we had a big push higher here, and you're going to see something else curious here. I have an ascending broadening wedge. Let me clean this up a little bit. I'm going to pull back the falling wedge, and I'm going to just focus on this. Let's see here. Ascending broadening wedge. And when I say that, it's like, I get it, wedges, and you're just describing what they look like. They're all just triangles, okay? That's all you got to remember. These are triangles. There we go. And they all kind of follow the same rules, right? This one is broadening, and there's a whole bunch of congestion through here. You can see how the price is just overlapping. It's just passing through that $6 to $650 range a ton. So not motive. Not motive. It looks like there might have been one motive wave through here. But again, this is a weird way to get around. AMC has a weird way of moving. I don't know how else to describe that, right? And it's even hard to get my touch points through here exactly because of how steep this pattern was. So the giveaway of the analysis here was when price failed to push all the way back up to this top trend line, we get what's called a partial rise. If you have a partial rise and then a downward breakout like this, Polkowski says this is you have like a 65% chance. It's like some ridiculously high chance that you're going to meet the price target on the bottom, which for a broadening pattern like this is going to be the beginning of the pattern down towards $5. So as soon as price broke out, came up, and then set a new low after that initial push down, this is a three-wave confirmation of this new downtrend because we need the higher low, or we need the lower high and the lower low both before we can draw that downtrend. And then that downtrend just extends and extends and extends and extends. So at this point, you could have shorted AMC at 658 and just rode this thing all the way down to the price target towards $5. And the price didn't actually find a bottom until around 450. So it's pretty common to see the price exceed a price target and then form some sort of basing pattern down there. And through here, this is a pretty clean motive wave. I'm going to relabel this, and I'm just going to take it from the top. I'm going to draw that downtrend. And then I'm going to take, oh, that wasn't a channel tool? Give me a channel tool, please. Top of the trend, and then here's a low, right? This was the lowest low that defines that channel. And that would be the downtrend right there. And I'm going to take this all the way back to the low, that first low that confirmed that initial downtrend. This is wave 1. 1, 2, 3, 4, 5. Then we had wave 2, and then we had wave 3. Okay, so this is probably a good spot to like take a breath, and let's talk about how we use the RSI to read into these waveforms. So the RSI is not magical. It does not lead the price around, and there are no rules. The price forms the RSI. It's an expression of the averages. It's an oscillator. So it takes the average gains or losses, and it turns it into a percentage between 0 and 100, obviously. And so in this way, we can kind of get an idea of how strong the price is or which way momentum is swinging. When we reach into overbought, oversold on the lower end, overbought on the higher end, we're saying that we're at an extreme in the trend, at which point we're saying that, hey, if we're at extremes, we're likely to reverse, right? Wrong. You have to watch the oscillator as an oscillator. If you're in an extended bullish movement, you're going to see oftentimes the RSI reaches into overbought 3 or 4 separate times. You know, here it reached all the way up to 85. Right? And then I think it still climbed. Yeah, it still set one more high, and the RSI was still lower there. And that's the cue, right? When you start getting these relative difference in peaks, that are opposing or juxtaposed to whatever the price is doing, that's where we get these divergences. And you have to be careful too about these divergences. You might identify a divergence and go, ha, there's going to be reversal there. And then guess what? It doesn't happen. And that's because the Elliott wave degrees matter. On a small degree, you might have that divergence form. But guess what? Maybe you're only in wave 3 of a 5-wave form that's unfolding. And you get that bearish divergence at the top of wave 3. Wave 4 comes down, you enter short, and then guess what happens? Wave 5 appears, and now the RSI isn't rising nearly as high, but the price is setting a new high again. It's like, ah! Yeah, so you really got to keep track of the degrees, the relative moves in the RSI. It's very tricky. But let's go back here. So I'm calling this wave 1 through here, and you can see the RSI here isn't overbought, and that's pretty typical. Wave 1 doesn't necessarily make enough progress to bring down the averages overall to create that oversold condition in the RSI. What happens next is a 2-wave, which is just sideways here, and that's fine. Generally, it's 3 waves. I'm sure on a smaller time frame we could see that, but here it's just going to be like flat. And after wave 2, when we set a new low beyond the extremity of wave 1, and it's possible that wave 2 sets a new low, but does not end, which is confusing, but we won't get there. But we'll just assume that wave 2 doesn't set a new low. As soon as we get that newer low, we start counting wave 3. Now we're fractaling. Going back to fractaling, motive waves 1, 3, and 5 each have their own 5 waves inside of them. And wave 3 is the most commonly extended wave. It's so commonly extended, in fact, that Frost and Pretcher recommend just counting an extension. Just start counting the extension, because more often than not, you're going to be right. And even if you're not right, you're going to be okay. Because by the time you get to the end of that 3-wave count, if you are wrong, you'll be looking for a corrective wave anyway, heading in the opposite direction. So you could do that here. And I haven't actually counted this. I don't actually know. I probably have in a prior video, and that's why I have the channel here. But let me get going here. I'm going to start labeling this. This will be a long one about AMC. I'm going to start in the minuet degree. There are, in fact, I'll even put it down. This is minuet. Okay. I like to make my minuet waves blue. And I do that because colors help me. Sometimes it's hard with just the numbers. And I'm going to go ahead and just put some notations down. 1, 2, minuet, 2, minuet. And when we start that fractaling, start counting those 5 waves inside of that 3-wave. You following me? We're going to go down a degree in Elliott wave. And the wave degree below minuet is sub minuet, which is really easy. This is an easy one to remember because it's like sub. Sure. Okay, and I use yellow here. So we're going to start counting sub-minuet waves. This initial push we're calling 1, and you can see here that the RSI is oversold, right? Okay, here we go. There's 1. And now we're going to start applying the Elliott wave rules here, and we're going to say that the next wave down is probably going to be at least as long as wave 1. We've had waves 1, and I'm going to label wave 2 here. And we're going to be looking for wave 3, which simply cannot be the shortest wave. So if wave 3 is shorter than wave 1, it cannot be the shortest wave. If you're in a motive wave, then wave 5 will be shorter. But what's more likely is that wave 3 is extending. Unless you see a diagonal form. That's what forms a diagonal too, is these diminishing actionary waves. Anyway. We won't get there. What I like to do is take an extension tool, and I just take the end of what wave 2 is. And here I'm not using the high. You might notice that. And that's because I want to use the end of the motive wave. But we'll go to the high. Sure, why not? And we'll say, hey. So wave 3 is probably going to be at least 100% of that distance. So what this tool does is it's measuring the height between the 2 points that I drop down. And then when I draw that 3rd point, I'm saying apply that height to this point for reference. And so then this gives me a measure for where wave 3 would have to be if it's not going to be the shortest wave, i.e. longer than the first wave. And sure enough, we passed that 100% extension at 526 and found ourselves bottoming towards 517 before entering into another sideways correction. Cool. And here's something else fun. The 161.8 extension is often reached as well, especially in a 3rd wave correction. And you can see that wave 5 here actually goes beyond that too. So This was a pretty strong wave down. So we call this 1, 2, and this can be 3 right here. And guess what the RSI is doing? Oh, yet again, here we are, setting a new low in the RSI. Of course. And then you have to watch this carefully. You can see that the RSI is like moving around through this 30 level here, but remember, it's relative, right? It doesn't matter that it's actually on 30. What matters is that it came up and moved sideways for wave 4. I'm going to go ahead and label this sub-mini wet wave 3. I'm going to duplicate this guy, pull it over here, and say, here's sub-mini wet wave 4. All right. So we've got 1, 2, 1 of 3, 2 of, wait, this is actually 1 of like 5, but it's of the third wave, right? So mini wet wave 1, mini wet wave 2, sub-mini wet wave 1 of mini wet wave 3, sub-mini wet wave 2 of mini wet wave 3, sub-mini wet wave 3 of mini wet wave 3, sub-mini wet wave 4 of mini wave 3, and then 5. Finally, right? Oh, geez. And then it gets tricky. Then it gets tricky because there's another uptrend right there, right? So where does wave 5 actually end through here? Is it this low right here? Because if it is, I have a problem. Because the ABC correction should not completely eliminate the actionary wave that preceded this downtrend. It totally does. We get a new high. So, okay, now we have to start negotiating. How do we get this 5th wave through here? And I think it's pretty simple. I'm going to go ahead and open that 15-minute chart and zoom in here because I think I'm going to need to make sure my after hours are on. Okay. I'm going to blow this up, and I'm going to try to find a diagonal here because wave 5 sometimes manifests as a triangle, a wedge, and that might be the chart pattern that you're most familiar with. Again, we're really cluttered here, so I'm going to go ahead and delete the 5-minute. I'm going to delete the channel. I want to get rid of this, but I'm just going to pull it down. And maybe you can start to see, I'm going to edit this too. I like to chart pattern the colors so that they match the degrees in the mini wet waves, right? And maybe you can see this right away. Yeah, do we have a wedge through here? Maybe you can see that. A, B, C, D, E, come down, and then boom, we're off to the races again. There you go. 1, 2, it's probably 3, 4, and this might be 5, super truncated down here. It doesn't matter, you get the gist. Sub-mini wet wave 5 here is complex because it's AMC. It can't be simple. Here we go. It actually comes into this giant wedge, and then we get our nice ABC reversal heading higher, which is going to be proportional to the downtrend that preceded it. Okay, so I'm going to go ahead and draw that downtrend through here. That's the downtrend. I'm going to label this, make it red, put the long dashed lines down. Oh, that's the wrong color. Make it red, please. Could you please make that? I ordered a red downtrend. All right, but okay, there's a downtrend. We're going to start talking about correction, but again, I want to talk about our RSI through here. So you can see 1 of 5, deeply oversold, right? 2, and then 3. That's probably 3. So interesting. I really want to label this like this, actually. Like, it's weird. It's like wave 1 extended through here, 3, 4, and 5. This is a weird thing. This is not normal. But you know what? It fits. If I can put it into a wedge, I'm gonna. It looks good to me. In fact, it might even be something a little less pronounced than that. It might be something more boring. Like it could be a descending triangle as well. Let me just show that. I don't really like descending triangles and such because you almost never get a perfect like horizontal level of support and resistance. But A, B, C, D, E. Maybe we got an extension sideways through here before we break down. Heading a little further. Interesting. This is, again, weird. It's not super normal. You can see, though, that we reached oversold in the RSI twice more. And that was kind of the end of that 5th wave. The end of that strange diagonal through there. I bet you if I went even further to the 1 minute, I could get more detail and make more sense. But I don't know if I want to pull up a 1 minute chart that's like 20 days long. It just take a long time for Thinkorswim to populate the data. Okay, so in the corrective mode heading higher, we're looking for 3 waves to confirm the breakout. And we definitely got that. And then we're looking for a retracement initially. And it's going to be based off the height here. So I'm just going to take some Fibonacci levels, and I want 100% to be on the bottom. This is how I do it, because that's the 100% level. And this is an approximation. I don't generally approximate the levels. Generally, I magnetize to the penny. We're going to turn on all the lines, and we're going to extend to the right. Okay, so as you can see, some significant levels here. 78.6 price bounces. We get another significant spin around that 50%, and we peak out towards 23.68. So this looks it looks pretty clean. It's hard to say where we stop. It looks like we had a massive retracement, right? So this could have been like wave 1, and this could have been a wave 2 that came all the way up here. But guess what happens? We break out into a new high, right? Which is annoying. So now we've got ourselves in a situation where we have A, B, and C, but we kept pushing higher. Oh, don't worry though. It's AMC, so it's going to do something funny. If you're looking for a correction, and suddenly you find yourself in a 5-wave form heading higher, that can't be a new motive wave. Guess what? It's probably something like a reverse triangle. Yes, an ascending broadening wedge appears. A, B, C, D, E. And E fell short, so it's possible this is A, B, C, D, and E. No. I like the way I have it labeled, where A is up here, B, C, D, and E. Failing to touch the top trend line. Technically a partial rise. Oh, that sounds familiar. Look, we have this back here. Look at that. Similar patterns, right? Funny. At any rate, we have another big spill, just like this one, right? And sure enough, the price target's met. The price target being the beginning of the pattern towards 450, price falling below there before finding a bottom. And then I started a motive wave count through here. 1, 2, 3, 4, 5. And it's kind of a long motive wave. I think it might look better on a larger time frame. 1, 2, 3, 4, 5. Again, just weird stuff. It was the best way to count it, I think. Otherwise, I could put it into like sort of complex corrective form where 1 is A, 2 is B, 3 is C. So A, B, C, A, B, C, A, B, C, A, B, C. That is been my theory for a while. The meme stocks, forever in correction. The forever correction, yes. Why forever correction? Why never progress? Well, I'm sure there's a lot of conspiracy theories about it. I don't really care for that so much, but at any rate, that brings us to the current point in time where we have the price moving strongly. And again, you're going to see the RSI here is hitting overbought a lot. And that's just because the price setting new high, new high, new high, new high. And this could be a motive wave. I currently have it labeled as a corrective ABC heading higher. And the reason why I did that is it just didn't strike me as looking very motive. It really didn't. There's definitely impulse through here, A, B, and C. And then again, A, B, and, well, we're looking for C. This could be 1, 2. This can't be 3, 4, 5. If it is, then it's super truncated. I think this really is A, B, and C. And if there is a push higher, we can get up to that $6 level. Losing the uptrend now, that makes sense in a wave 4. If this is truly going to be waves 1, 2, 3, 4, 5, we could be in some sort of diagonal, but again, I doubt it. Oh, there it is. Do you see that? Jeez. These things are so frustrating. Let me show this to you. Okay. I want to delete this one. There we go. And I just want to start. Oh, there it is. Oh, man. Do you remember me drawing this just a few minutes ago? Where it's like A, B, and C, and when C is like this, I almost never see an upward breakout. I was just talking about that back here in this other triangle. It was like really small. And I was like, look how small this thing is. But there it is. I've never seen this thing break out bullishly. Anyway. So it looks like we're in kind of a similar situation, right? Damn, A, B, C for A, B, C, C forming this wedge. Hey, we're going to get a breakout through here. Dumb. 1, 2, 3. Waves 4 and 1 don't overlap. That's fine. That just means that this could break out higher. It could, but honestly, it's probably not going to. Let's check our momentum indicators. The MACD is pretty good. When you have the RSI burning up, as people like to say, the MACD does the same thing. It kind of hovers up there. Momentum here is still bullish. The blue line passing that yellow line, that's momentum swinging down in the short term. The longer term trend here is also beginning to turn down. And now you're going to see this yellow line chase this blue line as these histograms get larger in a downtrend. That's what it looks like. I like to read into the implied volatility a lot. Implied volatility is a representation of how far the price might go, and the higher the implied volatility, the greater the move is anticipated to occur, right? So what I want to do here really quick is you can see that price here is clearly rising, right? Clearly rising, but what's implied volatility doing? It's going down. So what I read from this is that as price pushes higher, it's losing the ability to make big moves. Oh, yeah. Yeah, implied volatility drops in corrective phases as price overlaps. Something else, too, we can read to here is the volume, right? Everyone knows how to read volume. Sure. Look at that. Big downtrend in volume as the price of AMC pushes higher. And so we're probably going to be looking for some sort of bearish divergence in the RSI, where the peaks in the RSI are decreasing as price is increasing. And that's true most of the time here, right? Let me get this thing turned around. I've had my arrows pointing the wrong direction for a while. Let me just edit properties, make this thing red. This is how I like to say it by default arrow. So you have a point here, and then guess what happens? This is the best part. So let's talk about these divergences, how to read them. So first, what happens is you have the price peak towards $5, peaks a little lower at $4.97. So technically, the RSI should be lower, and it is. Price comes back up and sets a new high right here towards 534. But the RSI at this point in time is not setting a higher high, right? So guess what we say? Whoa, we've got a bearish divergence. Prepare for a reversal. Price starts heading lower. Everybody gets excited, but here's the clue. You need to wipe out a prior high before you can really call that bearish reversal, right? And so that's what I'm going to do here. I'm going to call this peak bearish reversal. And more often than not, this is going to be an A wave or a 1 wave. And here, in this case, it's A. It's minute wave A. Okay, if we wipe out this A wave, then we cannot be in a motive wave, because never should the peak of wave A be wiped out by wave 4. Okay, and that's pretty much what we're going to be looking for here, is a push down below that level. So I got this bearish reversal line, and if you're a long-time follower, you know those lines are good. That is how I pick my levels. It's not every peak, every valley. It's that one. That is the logically significant level, and we use Elliott waveform analysis to identify it. Anyway, so let's talk about this bearish divergence. You get excited, and the price is coming down, but hey, you got to wait for that reversal signal. Here it didn't occur, and the price continues to push higher. This was today. So let's go ahead and extend this bearish divergence line through here. And sure enough, the price finds some resistance, comes down. So now you have a triple bearish divergence, right? You've got 3 successive peaks in the price, and you have 3 successive lower peaks in the RSI. And guess what? RSI breaks. It breaks that divergence one last time, setting a new high. Okay, budget. Thank you. So wow, let's talk about degrees through here, okay? This peak was minute wave A. This peak through here, let's have a look here. A, B, C. This is going to be A. This is going to be another A wave through here. And it's going to be at the mini wet level. Duplicate A. And then you see how that works. We finished. So minute wave B. B waves have 3 waves in them, A, B, and C. Okay. Now, when we hit B, we start looking for C, and C is actually motive. Okay. It can be 3 waves. It can be 5. And here I'm actually going to take a look. So it looks like 1, 2, 3, 4, 5. Yeah, so this is actually 5 waves through here. So I'm going to go ahead and just make this easy for your brain and label this 1. There we go. 1, duplicate. 2, edit. There we go. And this is a very small pattern, right? 3. Is that 3? 3 can't be the shortest wave, remember? But maybe it's not. It's not. Look, wave 5 is shorter. That next peak is below the 100% extension of wave 3. So wave 3 is not the shortest wave. It's shorter than wave 1. That's for sure. It's way shorter than wave 1. But guess what? It's only got to be the not shortest wave. So let's see here. Take the extension tool. Take the dip. Take the high. So yeah, 566 would have been an appropriate 3-wave target. But it doesn't look like we're going to get there. It does not. And if you're asking why, it's because of the, I'm saying that's a good assumption because of these converging trend lines. You can just see them, right? Like it's very clear. 1, 2, 3. And you can see that wave 3 gives us the third point in our bearish divergence. Don't get too excited when you see this dip. It's wave 4. And guess what? There's one more wave. Wave 5. And that gives us, that completes minute wave C. Oh, yes. So 2 of these divergence points are at the minuet level. 2 of these points are at the minute level, which is a higher degree. So yes, you get the initial high, and you get 2 more follow-throughs. But guess what? These are for smaller wave degrees. You've still got to complete the larger wave degree, and that'll give you that last high. So I like to watch divergences in the RSI, and when you don't fail at that third touch point, you're probably going to get one more significant high or low as that divergence breaks. And now we've had a downward breakout. We're starting to rebound. We'll be calling official bearish reversal or a new downtrend once price passes below 540. Remember, price can do whatever it wants. There are no rules. There are no guarantees. If someone's telling you if then this is guaranteed, that's wrong. There's no such thing in the markets. The markets are not designed to do that. Unless you're cheating with payment for order flow. Yeah, that's a thing. I don't want to go there. Anyway, so there you go. You've got this, did I really delete the 1 too? Jeez, come on, Cap. Label the stuff. Just label it. Just do it. There we go. 1, 2, 3, 4. And we're going to be looking for an overlap between waves 1 and 4. We didn't quite get it here, at least not on this time frame. Let's go into the 1 minute. Yep, there it is. So on the 1 minute, you can see it. And the way I like to label this is with a rectangle tool, and I just drag it. I drag it over. So there you go. There's your overlap between waves 1 and 4. Are we in an ending diagonal triangle? If so, we're looking for 3 wave forms between each trend line touch. 1, 2. I mean, I guess it's messy. It is messy. If it is 1, 2, 3, 4, 5, A, B, C, this could be A, B, C, A, B, C, A, B, C, A, B, C, A, B, C. I can see this as moving in an ending diagonal triangle where we do have 3 waveforms between each trend line touch point, opposing trend line touch point, opposing trend line touch point. I'm saying it again, opposing trend line touch point. Because you can see there's 2 touches here at 1 and 2 touches here at 5. And that happens a lot. Just don't worry about it. You need to be looking for these waveform structures between opposing trend line touches. Opposing trend line touches. Opposing trend line touches. Okay. Anyway, you can even argue that this is all ABC up here through the year, but I don't know. I like the way I've labeled it. Zooming back out to the 15-minute time frame. So you don't see that overlap on this time, right? Oh, maybe you do. Was I in the hour? It must have been the hour. Anyway. The point is that this is probably an ending diagonal triangle. Oh, yeah. You can see how my notations don't work as well here on this time frame. You need to stick to the time frame that you made the markups on. You really do. Otherwise, it gets messy. There we are. Yep, looks like A, B, and ending diagonal triangle for C. So yeah, that $6 target's tempting. And yes, the price can push up there. But honestly, it looks like we're losing momentum and volume. Implied volatility is saying we're done going up. And the MACD has had a bearish cross where the short period is now heading down. Histogram's growing. And you can see that this has been just oscillating wildly through here. So yeah, AMC is probably getting ready to head back down. So we go into a larger time frame now, and we try to figure out what that means. And maybe you can't on this chart because that's a lot. I kind of see like is this, you know what we're gonna do? We're gonna do a fresh chart. Let's just like clear this thing off. Remove drawings. Clear drawing set. Yeah, get rid of it. Okay, here we go. So we found a low towards the end of last year, beginning of this year. I'm just gonna start. Yeah, I'm gonna drop a level of support and resistance right there. Can I do it right here? I think that's good because then we get this low too. And something else we can do is we can start to connect highs. So there we go. And here's that broadening top that I had shown in white before. I'm going to pull this top trend line down so it matches the same point in time as the lower trend line. Now I see 1, 2, 3, 4, 5. Yeah, this looks like a 5-wave form through here heading down. It's possible A, this is B, and we're going to get C. I don't know if I want to label that, but so A to here, and then A B, and C is probably up here somewhere, right? When I do this, you're going to see that the extension draws a target of 195. Oh, that's brutal. That's brutal. Let's look at the momentum indicators from the daily time frame. The RSI is at 55. This just looks weird. I mean, look, this is like exactly the chart pattern, right? Right in the middle of the oscillator. It's really not that indicative of what's going on. It's not giving us any hints. Volume spiking high, giving us a high volume top at that 750 area. This yellow line, the 30 period average through here, it's starting to come down, no doubt about it. Implied volatility on this time frame also dropping as price is increasing. Let's see. You can see the last time that implied volatility went up, the price was actually kind of grinding sideways through this pattern. So that's really interesting. Really interesting. And then you can see as price rises here, do you see how implied volatility through here drops? Price is rising. Then guess what happens? The price plummets, right? Implied volatility comes up a little bit, spikes big on the downtrend and starts to go down again on the price uptrend. So yeah, looking for probably 195. Whew. So I hope that helps. That's some of the logic. Wave 2 cannot retrace all of wave 1. Wave 3 cannot be the shortest wave. And if wave 3 is shorter than wave 1 and you are in a motive wave, then wave 5 is shorter. You're probably forming a triangle. If you're forming a triangle, pay very close attention to the waveform between opposing trend line touches. That's what I got for AMC. It looks bad. Honestly, it does. If AMC can make money and post a profit, that's great. If you're really following my analysis very closely over the last 2 years, I forecasted the downtrend from like $45 or something like that. Like the price was seriously like near $40, and I said we're going down to 7, and people laughed. They laughed at me. Cap, you clown. No, you clown. Look, I was right the whole time. I'm sorry. There's no way to cut it. It's just like, and GameStop's looking bullish a little bit. They're posting profits. The thing about the GameStop apes, I was talking to a friend about this. The GameStop apes went and bought product at GameStop. And you know what happened? Eventually, GameStop posted a profit. How cool is that? That is so cool. But you know what the AMC apes don't do? They don't go and see movies. And don't comment saying, I go to movies, Cap, and you can't say the AMC apes don't. No, go to the earnings reports and trend the attendance. Attendance is down. End of story. Oh, we had so many people here at Mario. We had so many people here at, I don't know, Avatar, at whatever the next movie is, Mission Impossible or Top Gun or whatever. It doesn't matter because in general, attendance has been decreasing. Okay? And honestly, I don't know. It looks like the company is growing because they're buying theaters and stuff and buying out competitors. But honestly, like, if the company has to restructure, that's going to be like their one asset is, hey, look, we have a bunch of leases in all these buildings, all these landlords who have nothing else to do with the space. So I don't know. Like, honestly, like, it kills me. But as soon as the apes voted to no dilution in 2021, I was just furious. It's like, you guys, the company needs money. Let them raise money. And because that didn't happen, we got ape. And look what that's done. Jeez. Like, I used to be super into the movement, like, and that's what got me going on the YouTube, but I mean, I followed Trades, and now of course Trades has gone dark. So I don't know. It's been like a super long road for me with AMC, and now I do my best to just not trade it. I just don't trade it because it's probably not a good idea to be on YouTube and like pumping things. Like, it's different. Like when I talk about gold has solid reasons to go up. It's like, oh, look, a commodity that hasn't risen in price with inflation. Wow. Okay, well, that makes sense. It takes a few years, and we have historical data to establish that. It's like eventually the price of gold will balance itself against the money supply, or the market conditions will eventually acknowledge the new environment, right? And I think that's bullish, personally. It doesn't have to be, though, because remember, dollar strength could go up. Anyway, I think that's a buying opportunity. Gold's something I've been chasing for a long time. I'm looking at some ETFs, GDX and GDXJ, and I'll be following those more closely in the future. And really, the channel might just start going that way. When I was 18, I started buying silver. Like, listen, I'm 32 now, and I was 18 when I started buying silver. And I have silver I bought when I was 18, and I'm still holding it, you know? Hodl? Okay. I've got silver I've almost hodled half my life. Anyway, this is a long discussion now, and I'm sure no one's even watching this long. If you are, you should definitely comment that you did. I just like to make the videos. I do. And sometimes I just ramble, and that's okay too. This is the first take, so for me, the time investment is actually mostly just the recording. Sometimes I do multiple takes. I never like to, but anyway, I'm gonna go. This has been a long-ass video just on AMC. Thank you for tuning in, and stay updated. Hydrate. Happy trading.